Hey, if you follow the stock market, have you seen what's happened over the last couple of weeks? It's been pretty amazing. We had that huge move down right at the beginning of August, and then just like out of the blue, it turned around and rallied all the way back and covered all of the losses. So if you're specifically an options trader and you're trying to figure out how to make more money in the options market, you have to follow the stock charts. You have to do your what's called technical analysis, chart reading, whatever you want to call it. The best way to become a better options trader and to make more money is to follow the charts. And if you know this as an options trader, the ultimate deciding factor of whether you're going to make money or not on your options trade is where the stock ends up going. Now, you don't have to hold the position forever. You just need the stock to go in the right direction. But if you're not watching the stock charts, how do you know when to get in and out of your option trades? How do you know when to pull the trigger? You have to look at the stock charts, technical analysis. So that's what we're doing here. I make these free videos for the trading community. I've been in this business for over 30 years now. I use the stock charts, technical analysis as my main gauge of when to get in and out of my options trades. So if you want to become a better options trader, watch this video. We're going to go over the stock charts. I'm going to show you what I'm seeing, the patterns that I look for, the indicators that I use. And all these things help me time the trades better. All right, so sit back and we're going to jump right into it. Okay, everyone, Lee Lowell here from smartoptionseller.com. We're going to just jump right in and start looking at the stock charts and see what's been happening over the last couple weeks, because there's certain things you can look for. And I made a video the last time on these two specific indicators that I look at, and we're going to briefly talk about them again. The VIX and the fear and greed index as well, but more specifically the VIX, because that really ties into how options are priced. So let's just take a look at the market and see what's been happening over the last couple weeks. And we're going to look at some individual stocks and the indexes, and I'm going to show you what I'm seeing on my chart. So what you see up here for the newbies here, and I go over these stock chart videos. I make these videos almost every weekend. Up here is the price action of the stocks, and down here is the RSI indicator. I also have my 20-day, 50-day, and 200-day moving averages up here as well. And I draw these channels to give myself an idea of which way the stock or index is trending. The trend is your friend. You'll hear me say that all the time. You want to follow the trends. But here, let's go over what we're looking at here. This is a daily chart of the SPY. That's the exchange traded fund for the S&P 500. Here it is, SPY, and you can also look up here in the left-hand corner. That's the symbol. So what's been happening? As I said, right at the beginning of August, so before we talk about the beginning of August, you can see the stock market was making all-time new highs here, right above, right in the low 560s. Okay, here's the price right here. This was all-time new highs, and then we started going down in the middle of July, but this is the move right here, right at the beginning of August, these 3 days, 1, 2, 3, right here. A lot of panic set in. Huge selling in the market. Everyone was getting scared. Everyone kept thinking, just like they do every time we get a sell-off, this is it. This is the end. The stock market's going to crash. Everything's going to, where, and everyone's going to lose all their money. So you got to get out of the stock market and sell all your stocks. So we had 1, 2, 3 down days, and then look what happened the ensuing 2 weeks. It rallied all the way back. This is what we call a V-shaped rally, V-shaped rally. Now, of course, when the stock market's all the way down here, the last thing you want to think about is buying stocks, because all you're thinking about is, I got to sell all my stocks because I don't want to lose any more money. The biggest opportunity in the stock market and even in the options market is when there's so much fear out there. This is when you should be buying. Down here, when the market is making these lows and starting to rally back. Now, nobody knows when the bottom's going to be in. Nobody knows when the rally's going to start, but there are a few clues that can help you. And the last video I made about the VIX and the fear and greed index could definitely help you pinpoint that potential turning point in the market. And I'm going to show you the VIX one more time, but on my charts here, so the RSI indicator is an overbought, oversold oscillator, and it oscillates between the 80 level and the 20 level. Those are the levels that I set for overbought and oversold. So you can see down here it's getting a little oversold, but The real turning point comes when you look at the VIX. I'm going to bring up the VIX now, and I made a whole video about it last time. The VIX, okay? The VIX moves inversely to the stock market. When the stock market goes down, the VIX goes up. And what is the VIX, if you're asking? The VIX is basically levels that are gotten through the front month S&P 500 index options, the implied volatility of the front month S&P 500 index options. Okay, so when stock market goes down, people getting very nervous, they're panicking. So what they're doing is they're buying put options. When you buy put options, you're protecting yourself for a downside move. And when everyone's buying put options at the same time, it jacks up the volatility and the price of those options. So you'll see the VIX. Look at this spike. It went up above 65. Okay, let's look at a longer term chart here. Let's go out to the weekly. Okay, the last time you saw a massive spike like that was right when COVID hit. Okay, the VIX can really help pinpoint the turning point in the stock market. And the spikes in the VIX, which means there's a lot of fear out there, but it also means option prices are going up at the same time. So if you're an option seller like we are, these are like the best times to ever sell options contracts, because if you look at all these spikes that you see here, they only last 1 to 3 days at most. Even the COVID, it only went up a couple days and then it drops right back down. What does that mean? When the VIX drops, that means option prices come back down to normal. So if you can get into an option selling strategy as the VIX is spiking, you're going to make money very quickly. Just because the volatility comes down, it doesn't really matter where the stock market goes, but that volatility coming back down to earth is going to help you profit very quickly. But the spikes in the VIX only last a couple days. So if you want to understand where a turning point in the market may come, is when after the VIX makes that spike. So you'll see it has a 1 day big move and then it comes right back down. So if you look at the S&P 500, you can see. And let's go back to the daily chart here. The market dropped, the VIX spiked, VIX starts coming down, and then the market starts to rally back up. The VIX is a pretty unbelievable indicator of not only option prices, but turning points in the market. And I made this whole video last week about it. But regardless, we're talking about technical analysis in this video. You want to understand. You have to look at the charts to see which way the stocks or indexes are moving, specifically trending. Okay, we draw these channels, these blue channels, to let us know what kind of trend the stock or index is in. And when it pulls back to the bottom edge of the channel, you know that's a buying opportunity. And if you want to sell out of a position when it hits the top edge of the channel, that is a better selling opportunity if you want to get out of trades. Okay, so what's happened here? Obviously, beginning of August, we had that panic, and then just the last 2 weeks, it's rallied all the way back. So where do we think it's going to go from here? Now, the thing that I'm concerned about is we've had this pretty strong rally back, which is great. Let's draw a little line here. This could be a double top right here. So we're going to draw this line right here. This could be some resistance during this week. So what does that mean, double top? You got right when it started the down move, that's a top, okay? And it comes all the way back up and stops right at the same area where that prior top was. That's what's called a double top right here. So we may get a little pause here, maybe a little bit of selling coming into next week because it's rallied back up pretty good, may take a breather and sell off here. Or the other thing is, and I know I might be sounding a little wishy-washy, is it could blast right through here, the resistance, and take out this all-time high, which was just made back in the middle of July, about a month ago. So it wasn't that long ago we made all-time highs. So this little resistance here could come into play early next week. We may get a little sell-off here. Doesn't mean we're going to crash back down, but we could get some more selling. Or if the bulls are really powerful, they could just drive it right through and gun for the all-time new highs. So I'm going to be, waiting out, looking Monday, Tuesday, Wednesday to see what happens here. So this is the S&P 500. Let's look at the NASDAQ represented by the triple Qs. Okay, remember, here's the symbol, triple Qs up here. Also, same thing. You're going to see the panic early August, and the rally all the way back. And meanwhile, here's the 200-day moving average, which will almost always catch the bottom or give some support on major sell-offs. Okay, this is the triple Qs. Rallied all the way back. We also can draw the potential double top here. We'll put a little resistance line here, just like we did for the SPY. So we may get a little selling, little people might take some profits here because people panicked and rallied all the way back up. They're thinking, oh, okay, I got to sell out here. I was lucky enough not to sell here, but now I want to take some profit. So we may have a little selling here, or just like the SPY, it could rally right through. So I'm going to keep an eye on these things, early in the week and see what happens. The Dow Jones is represented by the diamonds. It's called the DIA. That's the ETF. Now the Dow was in this channel here, and it sold off just like the others, and it rallied back up, but it did rally above the resistance here. So the Dow might feel a little bit stronger versus the other two indexes. So that's what we're looking for come early next week. But I'm a long-term bull. In the long run, the market always goes up over time. On a day-to-day basis, it's really hard to figure out where the market's going to go. If you're a day trader, specifically with options contracts, it's really hard to be a day trader getting in and out of trades because the market is so random on an everyday basis. It's really hard you have to have a really good strategy for day trading. I don't do it. I've never been good at it. I look for the long run. I'm out for the long run. We're talking years and years. The stock market goes up over time. Let's look at, this is a monthly chart of the Dow Jones. I mean, it just goes up over time. That's just the way the market works. The market is made up of real companies that create real products. People pay for those products. And if these companies keep making more money, revenue quarter after quarter, the stock price has to go up. Okay, that's how the indexes work. So let's take a look at some individual stocks and see what we can see if there's any opportunities here. So what do? In our newsletters, we're bullish. We always play the bullish side of the market. We don't really play the bear side because the market goes up more often than not in the long run. So we take advantage of that. What do? We sell put options and we sell put option credit spreads. That's the strategies that we use in the options market. If you want to get a little more information about what we do here at the Smart Options Seller, you can go to our website. I brought it up right here, smartoptionseller.com. Let me move myself over here. What we do is we sell put options. That's our main gig. Get our free ebook right here. Click on this free ebook. Okay, it's called The Put Selling Basics. It's the ultimate guide to selling put options, and it's an ebook that I wrote all about why we love to sell put options, why it's such a great strategy. Scroll down, and what you're going to do is you're going to put your name and email address in here. We're going to send you back another email with a link for the free ebook. You only need to sign up once, okay? Our server only recognizes one ebook per email address. So you don't have to put your email address in here 5 times. So that's all about put selling. If you want to learn a little bit more about what we do, here's our services tab. We have our newsletters here. We have our one-on-one coaching. We have our probability calculator. We also have our video series on deeper dive on how to sell put options, okay? So get our free ebook if you want to learn a little bit more about what put selling is all about. Let's go back to the charts here. Let's start to look at some individual stocks and see what may be happening over the next week. Now, the NASDAQ, which really tends to lead the market, so we're going to probably look at some of these more popular stocks. Now, this is Microsoft, okay, daily chart of Microsoft. Has been selling off since early July, but here's the 200-day moving average. The 200-day moving average really, it will pretty much help a stock or an index find a bottom. It may fall through it a little bit, but it will typically rally at that point. Once it gets in touch with the 200-day moving average, it's not going to stay down there for that long. You can also see down here, the RSI got pretty into oversold levels. So that's more of an idea that, a rally could be coming back. But a lot of these NASDAQ stocks have sold off pretty good. They're the ones who've led this whole rally higher. You get an opportunity like this on a pullback. If you want to buy stocks, if you want to get into real quality stocks, you have to see these pullbacks as buying opportunities. Whether that means you're just going to either buy some shares of the stock or, sell some put options, sell put option credit spreads, those are all bullish opportunities. Now, you can buy call options as well, which is a bullish strategy. I'm not much of a call option buyer, except on the very long end of things. I'll buy some deep in the money call options for the long term, but on a day-to-day basis, I don't really play with buying options. I'm an option seller. But if you're bullish and you figure out how to do it, how to time these things, you can buy call options. So Microsoft pulling back, possible. There was a good buying opportunity right here. And if the rest of the market goes up, Microsoft's going to go up as well. Let's take a look at Apple. Also, another major stock here. Apple sold off as well. Here's the early August. But here is that prior resistance area. You could see Apple was in this channel. It was resistance. When it comes back, when it finally blasts through and then comes back down, this prior line, which was prior resistance, now acts as support. Okay, once it breaks through, now it's a support area. You can see it came back down and bounced right at that support area. You'll see over time, I've looked at hundreds of thousands of charts over the years. I've looked at all these patterns that play out the same over and over again because people are the ones playing in the market, and people's emotions, greed and fear, will never change. So these patterns are all based on people's emotions and fear and greed. So they tend to repeat themselves over and over. So if you know what to look for in the long run, you'll see the spots, the turning points where you can get in on these opportunities. Apple's a great company. Look how it's bounced, really good. These stocks and indexes are going to take out all-time new highs. August and September typically can be bearish months seasonally. If you go back and look at the history, August and September, we've always had some sell-offs. But moving in towards the end of the year is bullish times of the year seasonality-wise. So I can see everything taking out new highs by the end of the year. I'm a bull for the long run. So Apple looking good here. Let's look at Amazon. All these tech stocks got hit pretty good. I mean, look at Amazon, fell pretty far down below the 200-day moving average. RSI got into oversold territories. VIX spiked. VIX starts coming down. That means stocks starting to rally up again. So Amazon moving back up again. Let's look at NVIDIA. There's also been another major player, been driving the market higher, had the sell-off since middle of July, had the spike down here early August, and look how NVIDIA is rallied all the way back. Bottomed out right near 90, and now it's back up to 124 and change. Just a huge rally. It's hard because I've gotten a lot of emails from people, a lot of people that I don't even know. They find me on the internet and they want to talk about things. They're so upset that they got faked out by this down move. They sold out of their long positions, their bullish positions. They got stopped out, whatever, only to see things rally back. It happens all the time. It happens to us sometimes too. This was a pretty dramatic move. We got out of a couple trades. And then things turned around. This took me by surprise as well, the strength of the rebound. But it happens all the time. We held on some of our other positions, which was great because now they're in profits for us. So you have to learn how to read these stock charts. You have to learn past patterns because they keep repeating themselves over and over. So this is NVIDIA. It's rallied all the way back. Let's look at Meta. We're looking at most of these big tech stocks. Meta's been actually pretty good, had some sell-off, but for the most part, it's been a pretty strong stock. We can draw some resistance here. It's mostly been in this channel, okay? This is Meta. And if we get a sell-off, you can see it's right near the top edge of the channel. Get a sell-off. The first line of support is going to come from the 20-day or 50-day moving average. Okay, it sells off. Those moving averages typically act like magnets. It'll pull down to the price action. And if it keeps falling, you've got the bottom edge of the channel here. Plus, you have the uptrending 200-day moving average waiting right down here. So if Meta does pull back, I can't see it pulling back much below the 450 level, all right? Or it could just blast right through. I mean, if the market gets going, Meta is going to just blast right up through here. So that's Meta. What else we have? Costco, another great, strong stock. Just keeps going up, had the sell-off just like everything else, and bounced pretty good. The other stock I want to talk about is Warren Buffett's Berkshire Hathaway. Other than investing in the S&P 500, which is what I do for the long run, you might as well get on board with Warren Buffett. I mean, the guy's the greatest investing legend of all time. Just piggyback off of him. You can see the stocks that he owns as well. On our website as well, we have, we can go back to our website here. If you go into the shop here, under the services tab, here's a report that I wrote about Warren Buffett. You can piggyback off of him. It's another options trading strategy, the secret to buying Warren Buffett for pennies on the dollar. You can get on board with all of his trades for a big, big discount by using a certain options trading strategy. So if you want to take a look at that. Why would you bet against Warren Buffett? You shouldn't. You get pullbacks like this, buying opportunities. You can buy 1 share, 2 shares. It doesn't really matter. Or you can sell put options. That's what I do as well. Longer term put options, because those are going to make you money. But that's Warren Buffett. What other stocks do we want to look at here? Let's go to our list here. Oh, Netflix. Let's look at Netflix. Strong stock as well. You can see uptrending 200-day moving average. That's just going to give it all the support. The RSI got pretty oversold here. Everything was hitting the bottom there. And look how it's rallied right back up. So, yes, it's scary when everything's selling off, but then you have to think to yourself, maybe this is a buying opportunity. Okay, I know it's very scary to buy at the bottom. You can wait a day or two to see that if the stock starts to move back up again, you can check the VIX. But you're not going to make money in the long run if you're not invested in the stock market. You got to dip your toes in at some point, okay? That's Netflix. Everything looks like it wants to keep going up, but we may have a little bit of pause here, just like I showed you in the SPY chart. This is Google. Has pulled back. It didn't really get the rally like all the other stocks did. So Google's sort of still kind of trading down here. 200-day moving average, giving some support. I would say, if everything else rallies, Google should get a pretty good boost, only because it really hasn't rallied back like the other stocks have. So Google could be gearing up here for a pretty good pop higher, only because it really hasn't moved as much as the other stocks. So I'm keeping an eye on Google for a potential pretty good move higher if the rest of the market keeps going. Let's look at a couple more and then we'll call it a day here. Let's see, what other stocks looking good? AMD's fallen off pretty good. I mean, I love AMD. I've been nibbling on some shares. Got hit pretty hard. Let's shut that down. Micron has fallen pretty far. It fell through the support area, but it's bounced back just like everything else. So I'm keeping an eye on Micron. What else do we have? Anything Tesla? It's hard for me to gauge Tesla. It's just an ugly looking chart. I don't want to really spend too much time there. What else? Adobe, okay. SMCI was one other stock that we talked about. It was a darling in early 2024. Look at this move. It went from 300 to above 1200, and then it's kind of come all the way back down, just got below 500 and rallied back a little bit. This one, you got to have some guts of steel if you want to play SMCI. So let's go back to the SPY real quick. Take a look here. As I said, we could get a little bit of pause or a little bit of selling coming in early this week, only because we got the double top here. People may want to take a little profits, but if the bulls can really be strong, they could pop this thing right through and gun for the all-time new highs. The other thing I want to show you is, how do you know whether option selling works when the VIX spikes like that? Once again, look at the VIX. It got up to 65 and it's come all the way back down under 15. Okay, this is where it was for such a long time, trading right around 15, even below 15. That means option prices were very low, and then when it spiked, option prices got real expensive. Let's take a quick look. I'll show you a website here at barchart.com. Okay, up here, barchart.com, free stuff. This is their options calculator. So I just want to show you the difference of option pricing, of how things could really, option prices could really move when the volatility moves without the stock moving. Okay, so we've got the SPY pulled in here, and we're looking at the put options because that's pretty much what we deal with. We have the underlying strike of 550, the underlying price of the SPY, 554 and change. We're going to look at the strike price of 500. That's out of the money strike price, and we're going to use 30-day expiration out in time. And right now we put the volatility around 15%. You have the inputs here, and the output is going to come out over here. So here's all the things that you need to know: the current price of the stock, the strike price, the days to expiration, the risk-free interest rate, and these default in there. You can change these to whatever you want, and I put in 15% as the volatility because that's where right now the VIX is trading. And also it's roughly mimics to a degree the implied volatility of the SPY. So we put 15 in here. So you can see the 500 strike put out of the money 30 days out in time is worth only 5 cents per contract. That's a nickel. If you bought this thing, it would only cost $5. Okay, but let's just say we go back to that one day where the VIX spiked to 65%. Look at the price of the 500 put, $17.35 a contract. That's $1,700. $1,700 you would get if you sold that put option when the VIX spiked up to there. Now it comes back down to 15. It's worth 5 cents a contract. So if you understand how volatility works in the options market, you can really capitalize on those 1, 2, 3 day spikes in the VIX by selling out of the money strikes that are just going to collapse in price when the volatility comes back down. And the stock price didn't move at all. All we're doing is changing the volatility component. So really make sure you understand the volatility component in options pricing, because it could really make or break you on days like that when we get a lot of panic and the VIX spikes. Okay, that's all for today. I hope this has been helpful. This is what we do. We put in the work. You got to look at the charts. You got to, have an idea of where, things are trending, pullbacks, the indicators, the patterns. You have to look at all these things if you want to become a better trader and make more money in the options market. All right. If you found value in this video, please give me a thumbs up, give me a like, tell your friends about it. You leave me a comment, send me an email. In the description below, please scroll down to this description. I've got links to websites, brokers, books that I think are all helpful to all options traders out there. So take a look at those links and see if any one of those will be helpful for you. All right, that's all for me today. I hope everyone has a good day, and I will see you in the next one. This is Lee Lowell signing off.